Everything you need to know about day trading. Why people day trade, why I don't recommend day trading, why you should avoid day trading. So if you want to know answer to each of these questions, keep watching. Assalamu alaikum and welcome to my channel. I am Shabbir Bhimani and I like to learn to invest in the market. In the process, I become a better investor and share my journey with my blog readers and now on this YouTube channel. If you want to be an informed investor, let's start. The first important question about day trading: why people want to day trade? The single most important reason that I have found over time is people want to day trade because they are able to leverage their position. So let's say if you have 1 lakh rupees in your account, you can take a position up to 5 lakhs, 10 lakhs, even 20 lakh rupees with the help of day trading margin. So it helps them believe that if they make a 2% gain on their highly leveraged position, they can make a good amount of money. However, they don't understand the risk involved in it, which means that a loss of 2% means the complete capital can be wiped out. The second most important reason why I see people prefer day trading is because there is no way to short sell in the Indian market. So if you want to short a position, you have to cover the same position the same day. So that's the second most important reason why people day trade. There are other reasons as well, like lower brokerages and all those things, but with the discount brokerages coming on, that advantages has gone a long way. But still people prefer day trade mainly for leveraging and short selling. If you want to be taking advantage of both of this, then only you should day trade. However, margin trading or trading with a leverage is a very high risk game. I don't recommend it. Even I recommend against it. So if you are taking a position that is 100% of your total amount, that's also very risky. Hardly a trading position should be 20% or max 25% of your total capital. So if you are willing to do day trade just because you can have a higher exposure, day trading is not for you. Why I don't recommend day trading, or why every trader should avoid day trading? The number one reason is timing the market. So as a day trader, you are trying to time the market. So you are trying to time your entry as well as time your exit. You need to be lucky twice in a day, and that's the odds are stacked against you. The second reason, and the most important of all the reason, is day trading creates an unsatisfied mindset. What it means is, let's say you took a long position at 100 rupees with say 4% as stop loss, so 96 was your stop loss, and suddenly the stock dropped by 2 or 3%. So you in your mind you thought, I could have taken the long position slightly late, giving me a better entry opportunity. So this is the first mindset where you are unsatisfied. Similarly, your target was stop loss was 4%, your target was 8%, so your target was say 108 or 1010. You sold off at 108 around 2:30 p.m. Then what happens is the stock, after you sold off, rallies another 4-5%. So it means that again you have a unsatisfied mindset. What it creates is, in the next trades you want to do or you want to cash in even more. So either your bets become larger, or you tend to take a higher riskier or more riskier day trade. So that's why it's always recommended to avoid day trading, because day trading creates an unsatisfied mindset, because you can never predict the spot on price. So if you want to take a long position, it can't happen like after you take the long position the stock doesn't go down from that level by 1 or 2% below. It's never possible. So then what happens is, uh, as you see those price discovered, or as those price hit the market, you tend to believe that you have taken a position which could have been even better, and then you try to max out, and in the process lose a lot of money. Day trading is not a part-time job. So if you think that somebody will tell you to enter and you will execute the orders, and then at 3 p.m. or 2:30 p.m. you will execute the order and cash in the money, it's not possible. You have to have pre-market, I mean before 9 a.m. you have to have the set of stocks ready that you want to day trade today. So let's say 30 minutes or 1 hour you should spend uh, prior to the market pre-opening, and develop a list of stocks that you want to day trade in on that day, because the stock should be in the news. There can be a sectorial news, there can be a stock news, there can be an earnings news, there can be some disclosure from the management. You have to play those parameters. So there can be various patterns like a morning spike and afternoon breakout. So you can just play out those parameters, and it has to be done prior to pre-market. You should be prepared, well prepared for that day of day trading, and then execute those according to the plan that you have made prior to opening of the market. Less is more. So if you have too many stocks on your list for day trading on a given day, your mind will be cluttered and you are bound to make a mistake. So at the most 2 to 3 stocks should be finalized before the market opens. So less is more. You have to follow the trend. So if you are not following the trend on that day for a given, let's say there is a very good news for a stock and you expect that there is a long-term downtrend and you expect the trend to reverse. That's not how day trading works. You have to follow the trend. So let the trend reverse and then you go long. Till if you see that in your pre-preparation to the market opening that a trend is down but there is a very good news for the stock, it can be used by the big investors to sell off. So let the trend reverse and then only take the long position. So that is the pre-homework that you have to do before the market starts. Book profits. So you don't need to wait till the end of the day to book out of your day trading positions. You can book profit in the middle of the day, close the uh, trading window and relax. You don't need to be active from say 9:15 to 3:30 because the market is open for that long. You can have your profits for the day and close off the trading terminal. That's more important because you will never be able to predict the bottom as well as the top. So you don't need to. You can have your stop losses and targets set. Once the target is hit, you have to come out. You have to revise your targets for the next set of rules, like if your targets are too small or if your stop losses are too big. You have to keep on revising them, educate yourself and grow um, as a day trader. The most important part for a day trader is to take a break. There are certain days where it's not your days. Even Sachin Tendulkar can have bad days. So you have to take a break. It doesn't work for you. You take a break, take a week off, take a day off, and come with a newly revived strategy on a fresh mind the next day or a next week. Finally, I will share day trading is not for everybody. If it doesn't work for you, doesn't matter, it doesn't work for me. I am too impatient to keep my position open for a day if I want to come out of a position. So even for investing, if I want to sell a stock, I can't remain invested for say or wait till say 12 or 3 p.m. To come out of my position. So day trading is not for everybody. If it is not for you, that's perfectly fine, because positional trading or investment may be right for you like me.